Hi, this is Brett Cenkus. I'm a business attorney with Cenkus Law and an M&A, mergers and acquisitions advisor with Braaten Woods. I do videos on all sorts of topics, but a lot of mergers and acquisitions. If you have an interest in more M&A content, free, all of it free, articles, videos, checklists, free legal agreements, free other tools and templates, go on over to merger-resources.com. If you have any questions about anything, feel free to reach out. You think something I said is incredibly insightful or incredibly stupid, drop a comment below the video. I appreciate you watching. Enjoy today's video.
Hi, this is Brett Cenkus. I'm a business attorney with Cenkus Law and a mergers and acquisitions advisor. Our firm is Braaten Woods. Today we're going to be talking about buying a business with no money down, 100% financing for buying businesses. Now you might notice that I'm in a different location today. I'm shooting this from Playa Coronado in Panama. If you buy what I'm selling to you today, you can buy this lifestyle. You can own a palatial estate. You can live in Panama and work from here. Buy businesses with no money down. I'm kidding. We were joking. Robert, who works with me, Robert Cherry, is down here, and we're talking about how funny it is if we rented a place in Coronado, Panama, and we are working from there this week, but if we sell this idea of a lifestyle, which is how people sell all sorts of things online, these infomercial type products, and that's what might have caught your attention is buy a business with no money down. It's a very scammy space where people sell these products, these courses, to try and sell the dream. If you just do what they do, you can own a palatial estate in Panama, you can be rich, maybe not famous, but you can be rich just without using any of your own money, without knowing anything. You just got to pay $995 for a course. So that world, by the way, is not a very good option for anyone. There are very, very few people in the world who are going to be able to buy a business with absolutely no money down, with no access to resources. Those products are everything I've ever seen in that space is scammy. They're selling just a dream, a hope. You're never going to be able to buy a business with their system. Okay, now there's a reason for that. We'll get into what you can do with little to no money down in a minute. There's a pot at the end of this rainbow. We've got some real tactics, but these courses are often sold to people who don't have any credibility, don't have any resources. That's a very difficult place to start from and to go buy a business with no money down. And the reason is because we live in a world where money makes things happen. And I can remember being 21 and thinking, I can't remember what it was, some commercial real estate project. We needed money to buy an appraisal and to do due diligence. We didn't have any money. I'm thinking, well, that's not fair. I mean, how do you get anything done if you don't have any money? Well, the answer is you don't, okay? Because you're better off going to do something and making a little bit of money and learning along the way, right? So people who have money also have experience and credibility. These things all kind of come together. If you've got none of those, no experience and no money, that's a hard place to get people to trust you, to sell you a business without you putting any money down, to invest in you without you putting any skin in the game. That's the bad news. Those products, I'm never going to be the one to say someone couldn't do it somewhere, you can't pull that off. Maybe you can. But for the most part, those kind of infomercial, 100% no money down products are not real tools to use in the world. Now, there are certain types of no money down business purchases that we've seen and that we've seen work. Okay? One is where you're running a business. We represented out of Cenkus Law, we represented a buyer of a business a few years back who bought an excellent business and didn't put $1 down on it. Now, he had run that business for 10 years. He was the owner of the business, a sole owner, was willing to sell. That's also kind of important because if you've got multiple owners and investors and things, they have different interests. They all want a big fat check. To get a deal done like this, which we've seen a couple of times, usually you need to have a good relationship with a sole owner who was sort of a father figure to our client and really wanted this person to buy the business. So that's a very unique situation. We've got one on our plate right now, which is kind of similar, and I'm going to get into later on, explain a few of the nuances, but that's a very unique situation. If you're not running a business today, is it possible to establish relationships with people who might believe that you are really deserve to buy this business, that it will be in good hands, that you won't run it right into the ground. A certain amount of they trust who you are in the world, they trust you to do this. By the way, that business, he's paying it off and he's paying a fair price, but just over time. So would this person believe that you're capable of paying that loan back? That's a unique situation. Again, often requires that you have run the business and shown your ability to run it already, or have a very strong relationship with someone who thinks, I really want to kind of help this person, and I think it will pay off for me. But it's so absurdly in favor, the structure of that deal is so absurdly in favor of the buyer that the seller's really got to want to do it, right? It's got to really be a situation. So you think that you're going to call a business that's owner who's listing their business for sale somewhere in the world and convince them to do this for you is not reality. That just is highly unlikely. They're probably not going to feel like you deserve that gift. They're probably not going to feel like you could pay that back. So the infomercials are selling this idea that really is not really in tune with where a seller's head is going to be on a deal like that. But we have seen those deals get done in those unique relationship situations. Another that I've seen work a few times, and doesn't require that you be running the business, and doesn't require that you have a special relationship, is the situation, but it does require some degree of credibility. So it requires that you be someone who's done something in the space or has a team whose resumes are appealing to a seller of a business. We've seen a model where the buying group, and it's usually a group, will come in with a plan and just give equity in a new venture. So in other words, they'll approach a seller of a business and say, listen, we'll buy you out today and we'll just give you stock in our company. And they're doing this over and over and over. Something like a roll-up. I have a video out there about a roll-up where you're buying a lot of companies in the same space and growing it into something much larger that you're ultimately going to sell or take public. That pitch we've seen work. We've seen sellers agree to sell out for just stock in a new venture, no money. Now, in every instance I've seen that, the seller stays on and continues to run the business. So this is a unique situation too, in that a seller of a very, very successful business who's really built something up and is doing great isn't going to be interested in this. They're going to want to take chips off the table. This appeals to an industry where the sellers almost universally, or maybe there aren't a lot of buyers for these businesses. So maybe they're selling for a few $100,000, under $1 million. The market is much less liquid. The seller's willing to stay on, right, and continue to draw a salary instead of being an owner. I mean, they have a little piece of the bigger venture, but now they don't have all of this smaller piece, is kind of tired of running the business. They just want to provide the service. So this works well. Think about situations where you've got, for example, maybe it's a small convenience store owner or a service business. It could be a contractor or a painter or professional services like dentists and vets usually want a little something more. But there are a lot of businesses where someone gets into it and they like doing the service. So they're in business for themselves. They're a roofer. They paint. They fix cars. Whatever it is. And the back office piece of the business, they hate. They have no time for it. They don't have time to go out and knock on doors and sell. A moving business might be a great example here. Someone who was a good mover and decided, I'll go in business for myself. And then they realize all the back office stuff, that's a pain. And if you come in with a good buying group, a vision, and some credibility, and you say, listen, let us do that. Let us do all the stuff you don't like to do. You'll continue to draw a salary, which will be about what you used to take out of your business. And now you'll just be an employee. And you'll have a little stock in our venture, and we're going to grow this into something much grander, and we have the resources and the team to do that. There's a pitch there that can work. We haven't actually seen it be successful. Usually the groups doing this have credibility, but they're not bringing any real money and resources to the table. They're limited by what they can do, but we have seen sellers, mostly sellers who are kind of frustrated with running their business. So these aren't the most attractive businesses in the world to buy. But we've seen sellers many sell out to a group like that. And is it possible that that group could do something and take that somewhere? Sure, that's possible. That's another no money down model in the world that we've seen work. Again, I haven't seen it successfully exit on the backside, but I have seen sellers sell their business for just stock in a new venture. So those are two truly no money down, and that's no money out of the pocket of the buyer, no borrowed money, no gifted money, nothing at all to the seller, okay? And when I think of no money down, that's kind of where my head is. There's another version, which is more common and more plausible for you to pull off, which is no money out of your pocket, but that the seller gets money at the closing table. So for example, you might find a business that's doing okay, that the seller, all of these ideas, by the way, if the seller's not getting a lot of money at the closing table, they've got to be able to do that. They have to stay on in the business and continue to draw a salary, or they need to be okay and have other resources on the side, or you need to give them enough money at the closing table to have that make sense that they could go on and have some time off and then go do something else in the world. It's very rare that someone's running a business. I mean, I guess they could be at retirement age and just go on retirement money, but like someone who's been growing a business, any degree of success, to just exit and get nothing, have no resources to work with and not stay on and work in the business, that's challenging. But it's possible to find a decent business where, let's say the business is going to sell for $1 million and you agree to get an investor to come in, or you borrow $250,000 or $500,000, and the seller carries the rest back as a note. Okay, the seller is getting something at the closing table. So if it doesn't come from your pocket, then it comes from an investor that you bring in, a partner you bring in, money you borrow, and the seller gets something. And then the seller may continue to carry some money back as a note or some seller financing. And I've done a video on that. That is that there's more opportunity there. You're not asking the seller, again, so the seller's getting something at the closing table. Whether or not they stay on and work for the business, that's a separate issue, but the world gets a lot easier when you have somehow cash is moving to the seller. That's a lot easier. Doesn't mean they need every single dollar. They might continue to hold a loan, or they might take some of the money in the form of an earnout, which is over time, depending on how the business grows, or just to defer some of the purchase price and push it out. But again, in this world, you're not putting money in, okay? But someone's putting money in, okay? There are some SBA programs out there. We don't really keep up with those programs. Some of our clients use those programs, and so we see it tangentially. But when we do M&A advisory work, it's just not a big part of the equation. But there are programs. There's two big programs the SBA has. One is the 7A program, and the other is the 504 program. The difference is 504 is all real estate. 7A can be for different things. Some of those programs over the years I've seen do allow for 100% financing. They usually want skin in the game from you, the buyer, but sometimes they'll allow you to take a gift from a relative, a parent or something like that, to be some additional money into the equation. So it's possible to get the seller 100% of what the seller wants. 90% of it, let's say, from the Small Business Administration, and 10% from your rich uncle. Okay, that's possible. Okay. Or the version of that I described earlier, which is the seller carries back some financing. Another version of this, again, we're in the world where nothing's coming out of your pocket, but the seller's getting something, if not everything, at the closing table. Some businesses, if they're well run, and this is the one we're looking at now for a client, have assets, and those assets don't have liens or loans on them currently. So it is possible to arrange a structure where at the closing table, you use the assets of the business you're buying to get a loan against those assets. That's possible. And that loan, depending on what kind of a loan it is, if it's a low loan to value, if there's good hard assets, equipment, things that are easily sold, right, then you only need, let's say you need 50 cents on the dollar to make the deal work. So you got $1 million purchase price. The seller's agreed to carry back a note for, let's say, $400,000. That means the seller is going to be paid over time out of the business as a loan. So you need $600,000 at the closing table, and let's say the business has $1 million in assets. It's possible to get some lender to come in and lend against those assets and do a deal like that. There are products in the market, they're called, they're a type of receivables financing. One type, if it's a credit card based loan, called merchant cash advance. So this is a business that's kicking off some cash on a regular basis. Maybe that cash is running through credit cards through the business. That's called a merchant account. It's possible to get a lender to look at that and say, I'll set up a credit facility at the closing table to use those future revenue stream of the business to give you some money up front. So maybe there aren't hard assets, but there's revenue, a consistent revenue stream some lender would fund. They're going to fund it at the closing table and help you get money into the seller's pocket. Those tend to be pretty expensive products. They have a place in the world, but some of them can be up to 100%. I mean, they're like payday loans. Not all of them, but it's a type of factoring is another term you might hear for this, where a lender's basically looking at, they're buying a future revenue stream. It's really not a loan at all. It's the sale of future revenue. Could you structure a deal creatively to get money from those and have the seller carry back a note or get a gift? Yeah, that's possible. Those things are possible. And that's a much more plausible way to get a business done with no money out of your pocket. And you're not asking the seller to take zero on day one, which fundamentally, again, that is a very hard sell. So on the deal we're looking at today, we don't know if we're going to get this done. We've been hired as the lawyers and as kind of an M&A advisors to sort of help just generally make this, how do we put together a structure that might make sense to the seller? The team who's buying has been running the company for a while. They have money, but they don't want to put a lot of money into that deal. What's a way we can put this together? And we're looking at all sorts of creative structures. One of them is to use some of the assets of the business and bring money in at the closing table. Another is to have the seller carry back a loan. Another is to have the seller continue to retain some interest in the business. So they continue to keep, they might in the short term keep 70 or 80% of the business, and our buyer purchases more equity over time at increasingly higher prices. All of this is things that we're brainstorming to make a deal work, to have our buyer bring as little upfront as possible for a few different reasons. That is, we may be successful getting a deal done there. We're just being creative, looking at different options, and among those options are all sorts of things I've talked about on this video. All of these things, whether they be the first two, which I described, which is you've been running the business for 10 years and the seller, the sole shareholder, is sort of a motherly or fatherly figure to you and wants you to buy the business, that option. The one where you have a team that comes in and just gives equity, that option. Or this other one where the seller's going to get something through some sort of creative structure. These are all possible things. Whereas I guess what I'm telling you is the infomercial that tells you just do what I do, buy my course, learn how to buy businesses with no money down ever, right? Buy a whole bunch of businesses and have a big Panamanian estate. That's save your money, save your money. And learn a business, establish relationships, understand these financing tools. And there is a real opportunity to buy businesses, without money out of your pocket. But that looks a lot different than the $995 infomercial you're looking at. So if you have questions about this, reach out, drop a comment down in the comment section. If you like it, share it. If you've ever had, if you're telling me I'm wrong, you've bought one of those courses and you bought a business with no money down from someone you absolutely didn't know and gave them no money at the table, I want to hear about that. So share your experiences. Thank you for stopping by.